Hello, everyone. My name is Peter Oliver, and this is The Burning Question. We're joined today by Simon Manley, the founder of Biochar Works out of the UK. He's also the former CEO of Carbon Gold. Thanks for joining us today, Simon.
Hi there. You're welcome. Nice to be here.
So the topic of today's conversation is essentially protocol development for carbon offsets generally, and specifically biochar protocol offsets. So Simon knows a ton about this and has been involved in this sector for a really long time. But I wanted to kind of take a step back for the people that maybe don't know how offsets are structured, and particularly how they're verified and consequently kind of issued credits for. We've seen a bloom of a whole bunch of carbon offset markets, generally around deforestation. Now we're seeing some around soil and methane reduction and a few other things. But biochar is not something that has shown up in a lot of the verified protocol marketplaces yet, and it is starting to appear in the voluntary markets. So Simon, can you kind of set the table for us? Like, what is an offset protocol? How do you make one? Who sells them? Or who makes them, I guess?
Sure. So an offset protocol, a protocol also known as a methodology, is just a standardized way of measuring in the carbon world anyway, a standardized way of measuring the carbon reduction impact of any given technology. So methodologies for calculating the carbon reduction impact or the carbon mitigation impact, methodologies exist for wind turbines, photovoltaic cells, planting trees, and hopefully soon biochar. So it just means that there's a sort of a universal way of calculating that carbon reduction impact that could be applied for certain trading standards.
Right. So the trading, so protocol fits into the overall trading marketplace. Who are the players, and kind of do they make the protocol, or how are protocols developed?
Sure. Yeah. So most methodologies belong to trading standards. So within the voluntary carbon trading markets, the best known are the VCS, the Verified Carbon Standard, which is controlled by Verra, and the Gold Standard. And both Verra and the Gold Standard have their own suite of methodologies. And so if you want to develop a methodology for any given carbon reduction technology, then you have to develop a methodology in line with their general guidelines.
Okay. So so I assume a protocol is something like, if you wanted to, for example, sell soil carbon as an offset, you would have to do X, Y, and Z thing. Would that be, that's kind of what we're looking at here?
Yeah, exactly. It's a method again for calculating that carbon reduction impact when you and you can be typically it's a process that's certified, or an activity. So how it works and how you would sort of come to create a methodology is typically methodologies are created by interested parties. That could be a commercial organization, or it could be a social organization, depending on sort of the outlook. What that organization will do is they'll decide on which standard they want to go for. So there's a whole bunch of trading platforms and different standards, but as I said, the VCS and the Gold Standard are probably the most well known and well used in the voluntary carbon trading world. And then in the mandatory carbon trading market, you've got the CDM, the Clean Development Mechanism. So you would choose your standard, choose your marketplace, and then approach them and say, okay, we would like to develop a methodology for, let's say, biochar, and working on the assumption that, of course, that there isn't a methodology already in place. And they would say, okay, yeah, that sounds. They'll say, okay, yes, we would be happy to receive an application or a concept note, or they won't. Working on the assumption that they do, then you can then put together a concept note and send it into the actual standard, which they will then review and approve or reject. And then depending on their feedback, they will then give you, and a small fee, of course, which you have to pay to them. You will then be given the go-ahead to develop that methodology to then apply again to them for a much more sort of in detailed and sort of involved approval process.
Right. So it sounds like, there's a series basically developing a relationship around this piece of, I don't know, intellectual technology or, but not IP that they're going to then protect, but IP that they will then share with the world. Is what you got to do. That makes
Yeah.
that makes a ton of sense. But like, why do it, right? You currently have platforms like Puro and Carbon Future. These are, biochar focused or negative emissions focused voluntary offset platforms. And as far as I know, there's not a gold standard or VCS standard around those. So, what is the benefit of getting one of these standard protocols in place?
Why do a protocol at all, or why do it for biochar specifically?
Why do it at all, right? I mean, just because, I think I understand there's a break and there's different groups in the market and they want levels of surety and sophistication around what they're buying. But what's the difference between a non-standard issued offset and a standard issue offset? Is the market larger? Are the prices higher? Like, how do you, what
Sure,
are,
yeah. I mean, it's getting a methodology for a specific technology approved by one of the globally recognized standards gives you access to a marketplace which you otherwise would not have access to. And what's attractive about those marketplaces are the sheer volume of demand, and the access to the potential customer base. So it's like being being given access to the European Union, or having a new sort of currency approved by the World Bank. It's suddenly you're into a global trading a marketplace where you can secure finance, not just transactional, but also all sorts of different financial instruments related to carbon projects, which otherwise you wouldn't have access to fund projects, technology innovation, business development, etc.
So that makes sense. So what percentage of the current offset market, do you have any idea, is based on standards? Is it?
Gosh, yeah, I don't know what the specific answer to that question is, but I mean
is it an additional 50%, or is it like if you're on one of the much smaller markets that are doing some of their own verification, etc., do those represent 10% of the market, or 3% of the market, or 50% of the market? Like,
it'll be well under 5.
Okay.
So let's how best to communicate it. So there's a list of there's an organization called ICROA, ICROA, and this organization publishes the sort of standards, or indeed some best practice for carbon trading standards and carbon trading markets. And all of the main carbon trading markets are basically approved by the ICROA sort of best practice mandate. And so if your market is not an ICROA-backed marketplace, then what that means is that most organizations who go to the carbon trading market to purchase credits for offsetting or carbon removals won't go near you, because it's without that ICROA backing, it's just too risky for these organizations from a reputational perspective to be purchasing off unaccredited marketplaces.
Got it. Okay. So that makes a ton of sense, and we've alluded to biochar during this, right? So now I feel like I understand the offset frame. I mean, in the protocol development, ideas. How does this fit into where biochar has been and where it's going? Like, was there ever a protocol for biochar, and how is it developed?
Well, I mean, first of all, I guess it's important to note that what's interesting about the current status is that of the trading standards that we've been talking about, so the VCS controlled by Verra is by far the largest. It's the largest single carbon trading platform in the world by volume, and where normally, as I was saying earlier on, it would be an organization, an interested party that would come forward and say, we would like to develop a methodology to the standard. In this case, Verra. What they have done is they've said, actually, we would like to fund the development of a methodology for biochar. We recognize its importance in the carbon removals sort of arena, and we recognise the urgency in getting a methodology approved onto our trading platform. So, in a relatively unprecedented move, they have said we will fund this process. And that's it's no short order. It's about $100,000 worth of investment. And they've sent out a request for proposals for organisations or consortia to come forward and say we would like to do this work. So that's a pretty unprecedented move by any given trading standard.
Yeah, that's great. When did the call for proposals go out, and what's the timeline for development on that?
So the RFP, the request for proposals, went out in November, and it's a pretty short time frame. And submissions from consortia were due in last Friday.
Great. Now you've mentioned before to me that you've submitted for this. So what are your expectations for hearing back, and then if you are selected, or if another party is selected, what's the kind of prospective timeline for a development of a biochar protocol at Vera?
Well, pretty quick, given how long most methodologies take to be drafted, developed, reviewed, and approved. So this timeline, the RFPs went in last Friday. Vera is going to decide, they say, within 2 weeks as to which consortia they're going to choose. So the work starts in February and it will conclude in September, which is a timeline laid down by Vera. So according to their timeline, we will have, let's say by October, a methodology for biochar available to the global project development community. And that's also an important point to make about methodologies, is that you can't really own them. Once they're developed, they sit in the public domain and are available to everybody, which is obviously
right. So you can't say, like, we're going to develop a protocol that works for my factory and my equipment, but it doesn't work for anyone else's.
I think many have tried, but the idea is that shouldn't be possible.
Not that people haven't tried. Okay, well, so then that's exciting. I mean, so I'm familiar with, there was at one point a protocol development under process maybe 5 years ago, something like that. And it didn't go through. So what's different this time? And like, what are your expectations? Do you have high hopes, or is this provisional? I mean, it sounds like Vera is, pretty excited about this, but what's different than last time?
Yeah. So, you're absolutely right. There have been a number of attempts previously to get biochar methodologies approved on various different trading standards. The most high profile was the American Carbon Registry, and another one on the BCS. Both of them failed, mainly around the issue of permanence. And what that means is that the kind of stakeholder community that were consulted during the approval process couldn't agree on the stability of biochar when used as a soil amendment. What percentage of that biochar is fixed carbon, and how long is that carbon going to be in the soil after a meaningful period of time? And there wasn't the science to support any sort of credible, let's say, sort of opinion on that.
Right.
That has changed, and so the big milestone that we went through last year, or maybe the year before, I think it's 2019, the IPCC published guidelines and calculations for their view on exactly what I've just described, the percentage of biochar which is fixed carbon, and how much of that carbon is remaining in the soil, if it's applied to the soil, after a 100-year time frame. And
what did they come up with? What was the expectation of permanence for the IPCC?
Sure. So if it depends, they organize their calculations by the pyrolysis temperature. Well, first of all, they organize it by feedstock types to tell you what the percentage of fixed biochar is fixed carbon. And then they organize it by pyrolysis temperature. So I think it's something like low temperature pyrolysis, 65% of the carbon remains in the soil after 100 years, medium temperature, 80%, and then high temperature, 89%, something like that.
Okay, and high temperature, I assume, is like over 500 C or something like that? Or over 600?
Low temperature is around 300 degrees centigrade, high temperature about 1,000 degrees centigrade.
Okay, so pretty high. And so this is just development of, or better understanding of what's actually happening in the soil, and that is just basically new science, new stuff that's come out in the last 5 years.
Yeah, exactly. And I mean, if you just have to look at sort of do a Google search of academic papers on biochar, there's an astonishing amount of peer-reviewed work on biochar now being published every day. I mean, I think it's something like a paper every day or something. So, the science has caught up with the requirements of the standards, which is great news. So that's one thing that's changed.
Mm-hmm.
The other thing that's changed is really the I guess the climate science in general terms. In other words, everybody now understands that we have preloaded the atmosphere with enough CO2 to take us well above this 2 degrees centigrade temperature rise. We need to suck some stuff out of the atmosphere rather than just stop putting stuff in. So there's the search is on for carbon removal technologies, also known as greenhouse gas removal technologies. And there's only a handful of recognized GGRs, greenhouse gas removal technologies, and biochar is now recognized as one. And so this recognition is again a major sort of breakthrough for biochar in terms of its carbon removal function. And then the third one is this is the fact that the world and the sort of respective governments are now organizing themselves around this sort of net zero imperative. And every organization in the world either should be or is establishing net zero strategies and plans and budgets. And an important part of any net zero plan is the carbon removal component to address residual emissions.
Right.
And again, so we're back into the carbon removal space. So there's only a handful of instruments, technologies, projects that you can actually implement to deliver those carbon removals. And within that category sits biochar. And so all of these factors combined mean that biochar projects can now credibly be, notwithstanding the approval of the methodology, of course, in September this year, but that's the link that will kind of join biochar projects and their carbon removal function to the net zero movement, which is gaining momentum every day.
Right. Yes, it's become quite clear what we've done, and now as you say, the search is on.
Indeed.
I talked to Antti Vihavainen from Puro, who's a carbon trading platform, and he's like, everyone's making these promises now, and they say by 2020, by 2025 or 2030, and he's like, we're really going to need to hustle, because it's not like they're doing 1/10 or 1/5 or whatever of what they need to do this year. It's all kind of backloaded, right?
Yeah. Well, I mean, I've heard only in the last couple of weeks that two major investment houses have contacted all of their investee organizations in the FTSE 350, telling them they have to have net zero strategies and fully costed out plans by the end of this calendar year.
Yikes. Well, yeah. So anyway, so I think that was a super helpful description of both how the science has changed and how kind of the cultural and also market demand for understanding the size, the scope, and the intensity of the issue and consequent demand for solutions. I guess I'm hopeful, and for seeing this through, and I guess I'm curious, you've both been an executive person who's, been in this industry a long time. And so I'm sure you've come up against a lot of the issues that, in some sense, protocol might help resolve. What does this potentially mean to the biochar market? Say this goes through in September.
Yeah, sure. A number of different things. I mean, the access to carbon finance for any new technology delivers a set of, I guess, factors which are universal, not specific to biochar. So access to carbon finance. So suddenly you've got additional revenue stream coming into biochar projects, but it's access to that finance and the ability to kind of securitize money against that incoming revenue stream means that new financial instruments are suddenly available to biochar organizations to fund their operations. Yeah. And the opportunities that this new finance presents in turn will drive innovation, technology development, more risk in the sector, and all of the things that it needs to take. I mean, what I'd like to see is Biochar will go on the same journey as renewables has been on over the last 20 years, to the point now where they're now beginning to withdraw carbon finance from renewables technology because it doesn't need it anymore,
Right.
because it's done the job, and that's what they need. That's what carbon finance will hopefully do to Biochar. And I think in the early stages, in the immediate stages, from September onwards, it will also result in probably the best marketing campaign that Biochar could ever ask for, because suddenly you've got the global corporate community tearing their hair out, trying to put together net zero strategies and plans, and the consultants that they're hiring to help them do this has suddenly got a new tool in the box. And everybody were coming forward saying, "Oh, you should try this. It's a nature-based solution. It delivers all these great ancillary benefits around sustainable agriculture. It's natural. It's immediate. You can hold it in your hand. It's easy to understand." And so I can see that's going to really drive awareness and hopefully demand over and above the carbon finance opportunities that arise.
That's two comments. So one, I think there's this huge opportunity just kind of for corporate partners who want to be aligned in their negative emissions. There's not that much out there for people that are you can spread olivine or base salt out there, but there are not that many companies that are like beach oriented companies, and there are not that many companies that are like, oh, we're like Coca-Cola, we can put carbon dioxide in our product. And so the prospect of having, some of the ag companies out there, which there's an enormous amount of people in that sector who can say, okay, this is actually aligned with what we want to do. We want to put carbon in the ground. This is a very straightforward way to do it. And then the other thing that you said that I thought was really interesting is essentially the securitization of income. Like what I see all the time is talk to a lot of people in Biochar, and they say, well, Biochar it's not like a software company where you can scale the cost, where the cost scales along with the user base. It's a manufacturing issue. So you have the reverse, right? You have to put in all this CapEx, right? And then as you scale up, the marginal cost declines, which is great, except that you need, $1 million or $10 million or $20 million up front so you can build the factory. And the idea that there might be instruments to help people get to that point would resolve, I think, one of the major issues, at least that I see for kind of large scale deployment at a commercial scale, like you see with some of the Pyreg and upsize pyrolyzers and so on. So,
yeah, definitely. I think it will really help the sector in that regard. Like we've just been saying, securing finance for projects. Yeah. So again, that will drive innovation. It will help address. There's a big gap in the technology market at the moment, where there's plenty of stuff at the bottom end, the small production scale, and there's lots at the top end. You've mentioned Pyreg, and there's not much in the middle. Yeah. And that's where we need a huge amount of development and innovation as well.
Yeah.
And another interesting factor that corporates are doing, sorry to interrupt you, is that now that organizations are beginning to understand that every year they're going to need a steady supply of offset credits and removal credits, what they're doing less now is going to the market on an annual basis and saying, okay, here we are again, we need 1 million credits, okay, Mr. Broker, what have you got? Because what's happening is demand is rapidly outstripping supply, and so they're going to the market sort of, and suddenly the price has doubled. And
hopefully this is going to work out.
Yeah, exactly. So what organizations are beginning to do now is actually invest in their own projects. Mm-hmm. So they will actually put significant capital deposits into the actual project infrastructure to assure a long-term supply of carbon removals at a set price. And again, that's going to really help the biochar sector.
That's interesting, especially because it has always seemed to me like, or I guess the more I understand about biochar, the more it feels like something that could be worked into a lot of manufacturing processes. Mm-hmm. And so that idea is super compelling, right? If you can get more people to say, well, if we're going to buy offsets, and we also manufacture paper, or do something where you have process heat and probably biomass waste and so on. Maybe you build a factory instead and you do it that way.
Yeah.
Super compelling. Well, so I don't want to take too much time away from you. I'm sure you're a busy man, and I want you to, you got to focus on the protocol for the rest of us, Simon.
Well, we're in that kind of period now where the submission is in and we're waiting for Vera to make up its mind. So hopefully they'll make the right choice, but yeah, we'll see.
Okay, well, the best of luck, and thanks so much for walking us through all this stuff. It's I mean, it's super compelling. It's very exciting. It's this enormous bottleneck in the industry right now, and I guess we're all rooting for you and for this protocol to go through. So, thanks for taking the time.
Thanks for talking to me. Cheers.
Bye.